Today I will share with you some practical trading setups, how to define your entry point and where to put your initial stop loss. Also, I will share with you a trading checklist that you have to go through it before taking any trade. I will also share with you my two main rules of stop loss, and we will have more examples. Hi, my name is Khaled Maziel and I am the founder of Trading Roadmap. Welcome to the 7th module of our free trading course, The Trade Journey. As you read this disclaimer, if that's your first time here and you would like to know about how to develop your winning trading plan, become consistent, control your emotion, and totally change your life, please start now by subscribing and hit the bell notification so you will not miss anything. And today we will discuss the trading setups. Just one thing before we start. So in our Facebook page, Trading Roadmap, we discussed about do you guys need more modules or more examples, and most people for now they started more modules, so we will still keep going with more modules. But also in the Facebook page we will start sharing more examples. We have started already last week, so if you haven't subscribed yet to our YouTube channel or you haven't liked our Facebook page, so please start doing this now. So let's get started. So today we'll discuss the trading setups, and we will share with you today before opening your platforms what you have to do, and also we'll discuss the trade identification and trading checklist, my two main rules of stop loss, triggers and initial stops, and we'll have more examples and then recap, and then we'll end up with the assignment. So let's get started. So before opening your platform, like those are some rules that you have to go through it, or something that's I find it's very important, it's very crucial to go through it before doing anything. So make sure you are in a quiet place with no interruptions. I know that might be difficult for some of you, but I believe at least for when you try to define the trades and decide the trades, or at least when you are doing your analysis, try as much as you can to be in a quiet place, so you'll make sure that you will take decisions in a quiet environment. Also, lose all your emotional baggage from the day or previous trades, and we are human beings at the end of the day, and sometimes we have some issues in our personal life or in your business or work life. So as much as you can, you have to try to lose those emotional package and try to focus on what are you doing right now, and also try to evaluate what you have with zero attachment or bias. And that's very important because many people, they just open their platform or their broker account or whatever, and they have the bias already, and sometimes it's wrong because most probably got your bias from a news or someone told you, or a Facebook page or Facebook group or whatever. So make sure that you don't have a bias, or even if you hear something, just ignore it till you have your trading checklist and go through your trading plan, and then you can decide if you're gonna take the trade or not. Then now we're gonna have the trading checklist, and those are some questions that we are trying to answer to before taking any trade. And like some of those questions, if the market is in range or trending, so are we in range now or in trending? It's very important to know this. And also, do we have any support alarms from a higher or lower time frame? Sometimes, and we'll go through some examples now, sometimes you will find when you have the multiple time frame analysis, it's gonna show you like in the monthly it shows you something, or even on a lower time frame sometimes you will have some clues from the market. And who's in control right now? And we discussed this before in multiple time frame analysis, and if you haven't watched it, I'll put a link for this now. So who's in control? And buyers are in control, or sellers are in control. And also, where is your entry and where is your protective stop loss? We're gonna go through more examples today, and I'll show you step by step how to define those, or just how to start develop this by yourself. So we'll start with the trade identification, and the way I define the setups, it's mainly the market is either in range or in trending. So, and as we know, like most of the times the market is in range. So we have the market is in range or trending. So if we are in range, that means we are looking for breakout trades or false breakout trades because it's range. And if the market is trending, then we are looking to the trend to continue or to reverse. Simple. Those are the main rules or the main setup that we are looking for in any trade. So I'll show you, like here, if you look at this chart right now, and what do you see right now? That's first thing, you have two things here. The first thing is you have this, that was a trend, and that even you can call this trend continuation, but then we got a trend reversal because the market had reversed. So you can call this a trend reversal here, and then the market went into range, and then you have a breakout of range, and then the trend continued. So that's the first thing. Also, you have a false breakout, and the false breakout happens also when the market is in range, and we went through the support and resistance. And if you haven't watched that one, I'll put a link for that one also right now. So you have here is your resistance, and then we have a false breakout with an inside bar, and then off you go. So that's a false breakout, one of the trades we are looking for. Also, we have a trend continuation after the market reverse or after the trend starts. Then we will have some trend continuation patterns, and we'll go through all of this today. So before going through entries and initial stop loss, I'm gonna share with you my two main rules of stop loss. And like we have some drum rolls, and rule number one, always have one. So always have a stop loss. Never ever trade without a stop loss. It's very important. I know, like, some people like to have a mental stop loss, and that's totally fine if you are more experienced, but you have to define where you're gonna exit this trade, when the trade will go wrong, when you have to exit. It's very important to know this before taking any trade. Second rule is only move it in your favor. So never move the stop loss against you. So it's always move the stop loss either to break even or to look some profits, which means never ever increase your risk. So once you have the initial risk, never increase this risk. It's very important to understand this because I have done it. I have done all those mistakes. I trade without a stop loss, and I said I have a mental one, and then the market gonna go against me, and then I'll decide no, I have to wait, and then I lost money doing this. So I have done it. You are not alone. I'm telling you this from my experience and from other people's experience. Make sure that you always have a stop loss, and your stop loss only moves in your direction and only moves in your favor. Now we will discuss some triggers and stops. So remember that we mentioned before, without the market structure and multiple time frame analysis, it's gonna be very hard to look at just entries and stop loss without understanding this. The market structure and multiple time frame analysis is very important, and that's why we have this trading course. We went through the market structure, the inside bar, the outside bar, the pin bar, the multiple time frame analysis, and how to draw support and resistance before talking about entries and stop loss. And I know, like, most of the time people were asking me where we gonna talk about entries and exits, and I said no, we have to wait. You have to understand this framework first before taking any trades. So let's get started now with the entries. So for the inside bar, the entry is mainly gonna be above. So in case you are taking long, so the entry gonna be above the inside bar, and if you are taking the trade short, it's gonna be below the inside bar. Now for the exit, sorry, not sorry. Now for the stop loss, you have a couple of things to consider. There is an aggressive stop, and there is another stop that you can consider, and there is a wider stop. I'll explain this in detail right now. So the aggressive stop is just below the inside bar. The main idea behind this, and that might be better in case you have a trend continuation pattern. And remember, like, the market structure and time frame analysis is very important. But most probably when we have a trend continuation pattern, in some circumstances we will go through with the aggressive stop. Sometimes I use the other stop, which I put the stop loss below the mother bar, just to make sure that I will not get stopped out like during any whipsaw, because sometimes the market gonna go up and then come back to test the lows and then go again in your direction. So sometimes that's a safer place to put your stop loss. And some traders have another wider stop. Sometimes they put it multiple ATRs. Some people say 2 ATRs from the entry, some people say 1 ATR below, some people say 2 ATR plus the market structure. It depends upon your trading plan. Like, you have to understand this, and you have to define where you're gonna put your stop loss. It depends upon your trading style, your personality, and your risk tolerance. So there is no right or wrong here, but you have to understand that when you have aggressive stop loss, most probably you have a bigger position, but the probability that you're gonna hit your stop loss is higher. When you have a wider stop loss, it might be safer, but then you will have a smaller position. We're gonna talk about this later, but that's like the main rule. Also, for the inside bar failure, and especially in case if it's like with a pin bar, the entry gonna be here, just above the high of the pin bar. And if we have the other type of the failure, which is an outside bar, so the market took this side first and then took this side first and took it there, so your entry might be the other side. It depends upon the direction. So if the direction is down, your entry gonna be here. If the direction is up, the entry gonna be there. So it depends upon your direction. Your stop loss for the pin bar gonna be the low of the pin bar, and there is another wider stop loss. Some traders just choose to have it like 1 ATR below the low, or some people even take it couple of ATRs or n ATRs from the entry. Some people take it like 2 ATRs or 3 ATRs. Again, it depends. We will have more examples now and we'll go through it. So let's start with some practical examples. So here we have this euro pound, and as you see here, we have some sort of range here, and then we have a breakout of range, and then we have the first pin bar as the first inside bar as a trend continuation here, and then we go to failure with the pin bar. So your entry gonna be below the low of the pin bar. Your stop loss, you decided, it's either gonna be here or either gonna be 1 ATR. It depends upon your trading style. Here's another example. We have an inside bar, and then you decide here if you entered long, because the trade here was long and there was nothing here to tell you to stop or to reverse. So most probably that it's gonna be a losing trade, because you got triggered and then the market closed below. And then you have another example here with an inside bar, and here you might, if you got triggered to the downside and you put your stop loss here, that means that's a losing trade. Otherwise, if your stop loss was there, that might be you might have been on this trade till now. Today we will not discuss the exits, because that's another, we're gonna discuss later about the trade management. But today I just want to focus on how to enter the trade and where to put your initial stop loss. And most importantly is to understand the market structure and multiple time frame analysis before taking anything. It's very important to understand this. Now we will go to the outside bar, discuss the outside bar, and the outside bar gonna be the same. So In case you are long, so your entry gonna be above the high of the outside bar, and the opposite for the bearish outside bar. Stops are gonna be the same. You're gonna have the stop just below, or a wider stop loss might be multiple ATRs from the entry, or it might be one ATR from the low. It depends upon your, again, your trading plan and your risk tolerance. Have some more examples here. So just let's ignore this outside bar because we didn't know what was there. So just let's focus on that one. So we have here the some sort of consolidation, and then we got an outside bars with a pin bar. So your entry here might be just below this pin bar. I just want you also to notice that's not only an outside bar, it is inside bar of this. So you have those 1, 2, 3, those are inside of this bar, and that's how we understand the multiple time frame analysis and the market structure. So it's not only an outside bar, it's also an inside, and you can put your stop loss here, or you can put your stop loss there, or you can even have it wider, and then go triggered, and then you are in this trade. Here's another example, also an outside bar, and then with a pin bar you might have entered the same, the trend went there. Same example here, you have an outside bar, the entry gonna be above the high if you reverse it from there, and then stop loss gonna be here or just down there. One more example. So we have this here, the British pound, Canadian dollar. So what we have here, that's a false breakout, because that, remember, like in how to draw support and resistance module, I showed you, like, for me the way I draw the support and resistance are, I respect the most recent swing. So that one for me would probably be an entry point, because you have an outside bar here, and then you got a failure of the outside bar, so with a pin bar which is plus, so you're gonna have your entry might be here, and then your stop loss gonna be there or just higher, depends upon you. But I just want to share one more thing here. There is another entry here. There is not only one entry there. You might decide to enter later, because don't forget, when we spoke about the inside bar, we mentioned the inside bar is not only the inside, it should be inside the previous bar, because the way we understand the market charts, those are data. So what we mean by that, this bar is inside those two bars. So there is another entry point here. You might enter below the low of the second bar or even the third breakout, because those two bars, they are inside those two bars. So I consider those two bars are still inside those bars. So even you can have another entry point here that might be a tighter stop if you would like to take it a tighter stop, but it depends. You might put your stop here, or even you can still consider it there. So that's how, like, understanding of the market structure gonna be important, and multiple time frame analysis is gonna be crucial here. When you have those kind of situations, you might need to think about it. It's not only a pin bar. No, I have, if you miss the pin bar, the initial pin bar, you still have a chance to take the trade. Another example here, so after we had this false breakout, and then the market went into range, and then it's totally fine here to take a trade, because that's an outside bar, but you have all of those are inside bars. So it's not only that one, so that's also still inside, and that's also still inside. And mostly importantly here to understand, we are in range. So, and we remember when we said, when we are in range, it doesn't mean I'm not taking the trade for inside or outside bars. I just need to be more cautious about what's happening. And that's one of the examples. By no means this trade gonna be easy, because if you are taking this trade and you are blindly just put a stop loss here, you might get stopped out here. However, if you understand the market circumstances and say, hey, for this situation I might need a wider stop because we are in range. So that's, I'm just showing you here how to decide even sometimes to take it, and that's for discretionary traders. It's very important because sometimes we decide based on the market circumstances, and this is one of the market circumstances that you might think, okay, I don't need a tighter stop loss here because the market is in range, and most probably I'll get stopped out if I just had a tighter stop loss. So it doesn't make sense to have a tighter stop loss here. You might need to have it wider a little bit. And also you are near the support, so you are near the resistance, so you might come back and test it. That's one of the things you need to think about. By the way, you still have some entries here, which is, count them. You have the failure of the outside bar, that's 1. You have the outside bar itself here, that's 2. You have even the failure here of the pin bar, which is another entry too that you might have to consider. Stop loss, again, same. It's gonna be even tighter here, or because we have some sort of range. It depends when you enter, because if you entered early, to be honest, I don't have, I can't see any entry here. The first entry I might consider might be just below this here, because you still consider this, you still have this pin bar. So most probably I would wait. If you're gonna enter here, you need to have a wider stop loss, because the market might reverse because it didn't take the pin bar. Then if you have even waited, you still have another entry that's an outside pattern, and we mentioned that one. So the same here, the entry might here either both ways, so you might enter below the outside, and that's here another way. Like if you just entered here and you put your stop loss just outside, you might have stopped out here, but then in your trading plan you might have another reason to enter because you got another outside, which is a powerful pattern, and we spoke about it in the outside power module, and I'll put a link for that if you haven't watched this one right now. And then you got another entry here, so you might go stopped out in the first trade if you have a tighter stop loss, but if you have a wider stop loss, you should have been in this trade anyway. So also we will go through now more examples just to make sure you guys understand everything. And if you like this video so far, please like the video right now. Just hit click. I'll wait for you if you can do that. And if you haven't subscribed yet, please subscribe right now, and also please leave me a comment and share this video. So let's go, and here we're gonna have more practical examples with multiple time frame analysis. And what you will see here on the weekly chart, we have this pin bar, plus it's an outside, but don't forget it's in range, so we have to understand that we are inside this range. If you go to the daily, it's really clearly that we are in range. And then I highlighted this line here because when you have a pin bar from a higher time frame like this, and then it got triggered, then you're gonna start look. You have two options here. You can use this pin bar entry point, and then you can have your stop loss here. That's one of the ways that you can use it. The other way you can use it, once you have the trigger here, you might go to the lower time frame, which you might miss the first opportunity here, but then you get enter on the second one, then you're gonna have a stop loss somewhere here. That's you. You have to decide. Is either some people even gonna take the trade here, or on this bar, on that bar, and then they put their stop loss here, and they have a wider stop loss, because since we are in range, because that's a breakout of range, we are expecting that we might come back at least to retest or to go back to the range. So it depends upon, again, it depends upon your personality and your risk tolerance. Would you like to have if you are more aggressive, or would you like to have a wider stop loss? Another entry here, which is here is a continuation pattern. So we have here the range with a breakout trade, and then we got another here A trend continuation pattern consists of a failure of an inside bar. So you got an inside bar with a failure with a pin bar, and your entry point would be below the pin bar. Stop loss again is going to be either the high of the pin bar or the high of the mother bar, or even higher with a multiple HR. Again, it depends upon you. One more example, and we are still in the euro pound. What you have here, so we got this trade here. That's the other one, but here it's also like a false breakout if you think about it from this perspective. So if you took the first trade, but here you have another false breakout, which is that line, because that's the weekly. So if you think about it, you got an inside week, and then we got the failure of the inside week, and then with a pin bar. And you might ask here why I highlighted this line, not that line. I'll give you 5 seconds to tell me why I didn't choose this one. I'm not saying it's wrong, but why did I choose that one? I chose that one because, don't forget, till now we are still inside. Those 3 bars are still inside the mother bar. So I didn't want to go with the first one. That's one. 2, I want to wait to see something on the daily time frame to confirm what's happening on a higher time frame. Yes, this one was an inside bar. It got triggered and we failed, but we came back. Then it tried to take it again up, but it failed and came back, so we're still in range. I want to make sure that we are getting out of this range. Yes, you might have entered early if you're gonna enter here just below the pin bar here, but you don't know. And by the way, you might have taken this trade and you stopped out. It depends, but I'm saying most probably when you have some situation like this, you might have to wait for some sort of confirmation. And if you go to the daily, you will find, like, even if you miss this entry here, you got another entry there. So you got an inside bar with a pin bar, and your entry might be here. And again, here when we talk about this range, I might need not to take this aggressive stop loss. So I might consider putting my stop loss above here, not there, because I am in range. I'm understanding what's happening on a higher time frame. I know that there is some sort of support here, and I don't want to get stopped out with a tighter stop loss here, so I might take it wider a little bit here, or even higher. I'm just showing you, like, sometimes you have to decide to take a wider stop loss, and it makes sense. It's not only aggressive, so we don't only think about having I myself I opt to take tighter stop loss most of the time, but those are some circumstances that I would consider to take a wider stop loss. I'll share one more example. I think that would be the last one. So that's the British pound and Canadian dollar, and what you see here is another false breakout, and then you have a continuation. So what you have here, as you know, like we spoke about this, how we draw support and resistance, and that for me, because I consider the previous swing, so we got failure of this swing here. What you got, you don't have much on a higher time frame. It doesn't tell you much here, but it shows you, like here, if we are talking about this, but if you consider that one, you got a pin bar here and failure of that one, and then the market came back. So if you were short here, you might consider, when you see something like this, you might consider this pin bar as an exit. We're gonna talk about exit later, but just got my eyes here that we might can talk about this one. But let's talk about that one. So you got this resistance here, and then we got this failure with a pin bar. And then again, what do we know about this? It's not only the pin bar. Those 2 bars are inside of those two bars. So we have those two bars are inside of those. So you might, if you didn't take that one, you might take this one. So that's another entry here, and then the market went and the fair, and again you go to another range, and then you might here you got a couple of things to think. It's here's the inside bar, all of those are inside, so you might exit down here, or even if you miss this entry point here, you might consider to enter again here. And even if you miss all of those, you got another entry point here. You got the point. Like it all depends upon how you think about the trade and how you understand the multiple time frame analysis with the market structure. That's why it's very important to understand the market structure, because based on the market structure as I showed you, sometimes you might decide taking a wider stop loss to preserve the capital. And don't forget, it's very important to think about preserving the capital more than making money. We're gonna discuss this later in some psychological issues, but as we go now, you will discover that we cover some practical psychological issue by not only by outside of the market but in the market, and by understanding the market structure, the multiple time frame analysis, the circumstances. So I think that's it for today. Let's have a quick recap. So what we discussed today, we discussed the trading setups, and I showed you like a couple of things that you need to consider before opening your platform or your trading account. For me personally, I use Trading View for my for charts, and I have a separate so I don't do the analysis on the my broker platform. I use the Trading View. That's an advice if you would like. I found it very helpful, so you will never have any impulsive trading or something, because you do the analysis in one place and then you can go to the platform to execute. Also, we will discuss the trade identification, and we have the range, and then we have the trend, and then in the range we will think about trend at the breakout of the range or the false breakout, which is support and resistance. And when we have a trend, we will think about the reversal, and we'll think about the trend continuation. Also, I mentioned the trading checklist and the main questions that we are trying to answer: who is in control, where is my entry, where is my exit. And we also I shared with you the main tools of stop loss. First rule, that you need to always have one. Second rule, it's only moves in your favor, never against you. Also, I shared with you some triggers and initial stops that you have to consider before taking any trade. We went through more examples, and I think now we're gonna go for the assignment, and as usual, practice as hell. So you might need now to start to go through some charts and start to find those trades. And as I showed you, you're gonna first think, are we in range or are we trending? And then you're gonna think about, okay, if we are in range, am I gonna trade support and resistance, or I'm gonna think for some clues for the breakouts. Same for the trend. Are we a trend continuation? Are there some trend continuation where I might consider entering mirror? And I urge you to do this exercise by yourself and take screenshots and have like a Word or Excel, whatever sheet you would like to have some trade, and start to have your trading plan in place, and start having, because your trading plan is not an end product. You will never have one trading plan is gonna be there forever. By having those some charts, and then you start to have some analysis, and then you start to record some data, that's how you're gonna evolve, and that's how everyone evolves in this business. I think that's for today. So if you haven't subscribed to our YouTube channel, please consider subscribing right now. Also, please connect with us on Facebook at trading.roadmap. Also, our account on Twitter at Trading Roadmap. And if you have any question, please send me an email, Khaled at tradingroadmap.com. Thank you for watching, and I'll see you in the next video.